CTM. Mic check. 1 2 1 2. What's going on, everyone? I hope you are well and doing great as we have this holiday session. Hope you all enjoying this time, enjoying your loved ones, enjoying your friends and family. I know I missed you all. Really looking forward to this session. There's so much that continues to take place even during this off time within CTM, out on the Discord, that I felt that it was important to make sure that we kind of document everything that's taking place and make sure that we have that so that we can continue blasting off in 2023 and continue as we're going. This chart, we're going to be talking about in this session. By the way, you probably and most likely will be hearing I have 6 of my kids and then 3 of their cousins in the background and all the tias and abuelos. So you'll probably be hearing some background noise, but it's a holiday session. So just going to go ahead and enjoy this time with you. We'll be talking about the CTM positioning. We're going to talk about ETH Daily Sale Guide, giving us that Christmas present. We're going to take a hard look at that. And then we're going to be looking also at the trade execution session from yesterday's dev team and CTM Summit team. And we're going to take a look at Litecoin, BNB. And then, of course, we'll take a review of the markets. JF, I hope you're recovering well and feeling well, my friend. Let me just go ahead and do one thing and get this in the correct order. Boom. All right. So this chart, by the way, that we're looking at, it reminds me a lot of what was happening here 4 years ago. Because I remember Christmas party, Mexico, 4 years ago, Bitcoin trading right around the lows, right? It must have been right around this period over here, Bitcoin 3,500. And I remember it very clearly, my father-in-law with his brother, and talking about, I remember the first entries into Bitcoin being somewhere around $8,000. I was coming back off of $20,000, tearing down, buying some at 8,000, and then watching it collapse. And there was a lot of fear. Back then, there was a lot of fear for sure. People just didn't understand what happened, Bitcoin coming off a lot in 1 year's time frame. And people were a little bit afraid for sure. Similar to right now, different, similar. But I remember very clearly looking my father-in-law in the eyes and saying, this would be a really good time to lean in. And truthfully, that didn't happen until Bitcoin was closer to 12,000. And that's also human nature. That makes a lot of sense. But what the reason I bring this up is because of 4 years ago, Bitcoin 35,000. You look at where it is today, and it is a 5x higher. And you got to say, well, off the high, it's down 75% or whatever it might be. And that's true, and that's also in 1 year again. But you also have to look at where it's come over the last 4 years, and specifically off of the last tightening low. This was the Fed tightening cycle with rates rising and quantitative tightening running. Granted, that's what's happening now, but it is different that they're doing that not because the economy was strong that they could raise rates and then pull away liquidity. And granted, it took them 12 years, more or less, to get to a point, not 12 years. It took them 10 years to get to a point where they were able to see the economy was ready for them to pull away that liquidity and then also raise rates and tightening. In this case, it was different. It was because inflation was getting out of control that they came in and they had to raise rates and also run off the balance sheet. So it is for different reasons taking place. Nevertheless, we'll see how long it lasts from here. Oh, Simon. Well, I hope you feel better soon, for sure. I hope it's one of those that are easy to beat and you're feeling like yourself again, bringing those good vibes and the light. So let's kick into CTM positioning, right? I'm thinking right now in my mind, the first thought I have is when we get back to work, I imagine it's going to take a session or two to get back into that flow and find the flow. But let's cover some CTM positioning. This is Bitcoin on the daily, out of the market on the buy side. Just to review, everyone knows one trade in 2022, minus 3.5% loss, significantly greater strategy, edge, more powerful, rather than dollar cost averaging into Bitcoin and watching that your average buy-in definitely continue to lower, but at the same time in a fiat value that also continuing to diminish, rather staying outside, dollar cost averaging into that fiat account. This is a fiat strategy. This is not a cold storage stash. It's a separate strategy. We're going to go ahead. We talked about in yesterday's meeting in the CTM dev meeting, summit team, trade execution challenges, talking about at the beginning of the year, refining exactly what it means between that cold storage stash, potentially what is a good allocation overall to have in that, and how you could use, whether you're trading the buy side only or the buy and sell side on the daily time frame, as part of that fiat strategy, that dollar cost average strategy. Plus, when you have overflow, when you have extra profits, perhaps, and potentially using that to top off your cold storage stash. So Bitcoin on the sell side on the daily time frame, also right now at this time out of the market, waiting for a signal, and that makes sense as Bitcoin continues to run sideways, right? We see that from the open Bitcoin position, 8-hour time frame, CTM 2.0. It's currently been running sideways now for about 13 or 14 days since entry. Price going nowhere. It's hoping a position that's basically flat right now. The Bitcoin, Ethereum, same thing, same amount of time. It's holding a position that's basically flat, 0.7% into profit right now, and that just continues running flat and sideways. Cardano has recently, for this open position, this was before the last FOMC meeting. This position was being held into the FOMC. It was in it for a few days before the FOMC. We talked about going into the FOMC as Bitcoin was holding a long position, Ethereum was holding a long position, how that was the beautiful dance as Cardano was holding that short position. And almost it was like the perfect hedge. It wound up working out where Ethereum and Bitcoin exited their positions, and Cardano is now holding a position over 20% into profit. Buy-side trades remain out of the market right now. Right now, out of the market on the buy side, and since the FOMC, they exited right prior, the day before the FOMC, if my memory serves me correctly, or the morning of, something like that, but prior to the FOMC. And then we've been on the sideline since, waiting as price runs dumped and then run sideways, right? Price would have to kick up close to the 17. It's pretty neat, close to the 17,000 level before a new buy entry enters the market. That would be actually above this near-term local resistance. Seems like whether or not it was buying into the, it's going to clear it. It's going to be right around the top of the resistance, that CTM 2.0. If it were to kick in now with a buy entry, would do it. And Ethereum also, pretty similar situation, waiting here on the sidelines, comfortable. So that's CTM strong right there. We love watching how the algo is able to maneuver the markets. No question about that. So, sale guy. Let me just bring up the ETH daily as we move over to this section over here. And this was a beautiful and welcomed surprise. Sale guy, I have a big holiday present for CTM. Daily settings, CTM 2.0, trading of Ethereum on the daily time frame, either just to trade for those who have Ethereum bags who prefer not to hodl, or long-term, and instead of employing a daily CTM2 strategy, like we do for dollar cost average plus on Bitcoin, but also on Ethereum. And just to kind of like reframe or recap that, I mean, we talk about whether it's on the buy side only, or if you're doing the same thing on the buy and sell side, but using this on the daily time frame as a fiat strategy, dollar cost average plus, this now opens up the door to be able to execute on Ethereum as well. So it could be, if we looked at what the returns have been back testing in the past on Bitcoin on the daily, it seems like going forward, it's going to get it done when we're looking for what we could do over the next 11 years. Ethereum's returns are significantly greater than what has taken place on Bitcoin. So now that, and by the way, this is something that I've looked at Ethereum on the daily. I wasn't able to come up with anything attractive. Really excited. The introduction here by Sale Guy. It opens up a lot more doors. It also opens up the door for this long-term strategy, dollar cost average plus strategy, if one wants to be able now to have a portfolio allocation to Ethereum and Bitcoin. And right, it needs to be kind of worked out what that allocation would be. Whether it was something like 70% Ethereum, 30% Bitcoin, or even vice versa, if you're looking to be a little bit more conservative. But I don't know that you need to be. Let's look at the drawdown. Let's look at this a little further. Before we look at it further, let me finish here. Sale Guy talking about over here, if you go back to 2018 on Bitcoin, on the buy and sell side, you're looking at a max drawdown of 22.39%. Doing the same thing on the Ethereum proposed settings for the Ethereum daily, you're looking at 10 times the return, 23,000% return compared to a 2,300% return. And by the way, 5 years, Bitcoin on the daily time frame, averaging something roughly around 9 trades a year, 2,300% return with a 23% drawdown. It's absolutely phenomenal. Ethereum here, 10x the return with the same drawdown, roughly the same drawdown. It's beautiful. Bitcoin did this with a total of 70 trades. Ethereum doing it with roughly 91 trades. They are both averaging, or I should say, why Bitcoin is averaging 14 trades a year. Ethereum averaged 18. Absolutely phenomenal stuff. Joseph, great to see you in here as we do this CTM holiday session. This is looking at Ethereum, US dollar on the daily, and it's in 2022. It's pretty. So I was, because I'm looking back at Bitcoin on the daily, and it's from 2021 to present. The last 2 years, it's had a 64% return. In 2022, look at Ethereum on the daily putting up an 87% return with less than a 20% drawdown on 17 trades. Now, this is both the buy side and the sell side, just FYI. If you go back into 2021 and you're looking at 2 years, Sale Guy, this is incredible work, 841%, 2 years, daily time frame, 29 trades, like you said, but this is 15 trades a year, 841%. Again, that drawdown is very low, under 20%. You go back to 2020, you're looking at a 3,800% return. Again, that drawdown in line. And again, this is averaging, 15, 16 trades a year. Absolutely beautiful stuff. And it doesn't have to be just on the buy and sell side. This is in 2022, looking at on the buy side only. And remember, 2022 was mostly down only, right? Down only as far as direction, and still putting up a 22% buy side only. Don't forget, buy side only, spot only for all these strategies in the long run, I believe, is more than enough to get it done. I hope I don't have over here going back further to 2020, so I'm not going to pull it up right now on this stream to see what it was on the buy side only, but we'll be looking at that in sessions ahead as we really try to narrow down and work out perhaps what the ideal allocation would be for those that are looking to trade. There will be some that want to only trade Bitcoin. There will be those that are looking for that extra alpha. Don't forget, because of CTM 2.0 and our money management, our risk management, The drawdown is roughly the same, whether you choose to trade Ethereum or Bitcoin. Now, we don't know if that maintains going forward, but we can say looking back, that's what it's been. So for me personally, now having this ability to look at Ethereum and add it into the equation, it's something I'm very excited about. I believe it's going to be able to increase my overall performance for this particular strategy. And what's exciting about that is I want to achieve that benchmark for this strategy, and it's an enormous benchmark, 70% a year after taxes. I mean, believe that's mind-boggling to even consider. But anything that is overflowing that, I would like to be able to use as a stacker for Bitcoin cold storage stash. All right, let's move over. Let's look at the trade execution. This was taking place yesterday. If you had the opportunity to watch this session, it was a long one. It was almost an hour and a half session. It was Andrew spearheading trade execution challenges, going ahead, detailing the outline of the session. Michael really helping him work that out. And then we went over it yesterday together inside the announcements channel. You can find this video if you're interested in watching. For me, it felt like I'm so glad to be discussed, even if we didn't accomplish anything per se. To be having these discussions for me are of high importance. Really grateful for Andrew spearheading, the team working on it. Really strong stuff. Let's move over to Litecoin. Let's move over to BNB. Let's take a look. By the way, AV, I loved that you put this out the other day, this kind of update showing current CTM, Cardano, BNB, Bitcoin, Ethereum, and Litecoin positioning. Pretty cool stuff. And then we're talking about, over here, we have HBAG09 talking about, you know what? This could be the perfect timing for the Litecoin settings. I think it was right before we went out to vacation. We brought up potentially looking at Litecoin settings. And it was initially because of going forward, if we see altcoins deemed securities, what could we use for potentially an ideal portfolio allocation? AV off the bat was able to go ahead and throw out some settings for Litecoin. These are the initial settings we looked at. This is going back to 2020. Now, again, this was him taking the time to like give us a head start. We have not been able to really dial them in, make sure that these are the best we could do, and then be able to consider whether or not we want to utilize them. As it stands right now, I mean, the drawdown is obviously very high, 43%. The return for Litecoin over 3 years, 694%. It's funny, I say that and you can hear my tone. I'm like, 694% 3 years. Could you imagine anyone executing how much the value that they would have for a 694% return, even with the 43% drawdown? A lot of people would be willing to risk such a high drawdown in order to receive such a high return. Obviously, it does not yet fit our parameters, but we'll see going forward if we could tighten that up. This is over 2 years. Again, that drawdown is roughly the same, 185% over 2 years. Litecoin actually well outperforming on a return on just the headline basis, outperforming Bitcoin. Of course, you can't compare when you add in the drawdown. But what's interesting, and I wonder, right? Because if I come forward to 2022, the return is flat, nothing. And I wonder, as we're getting ready for that halving of Litecoin, the halving of the miner's reward, that's generally the characteristics you would expect for Litecoin to be entering into basically a flat accumulation phase into the halving. If I look at price, is it any different? Not really. Then, well, this is going back to May. Okay, June. So from June until now, it's been flat, really flat. Actually, you could see accumulation. I thought it was going to be roughly the same as we're witnessing or looking at on Bitcoin. Bitcoin making lower lows in this area, right? Now, I know Ethereum hasn't made a lower low than the June low, But you could see this nice, long, rounding bottom taking place on Litecoin. That looks like a very long accumulation range as we get ready to enter its halving. I don't have the date on the halving. This is HBags09 is really the first one bringing this to my attention over here, as far as that the halving was coming up and that we are getting ready, perhaps with the timing, coming off this tweet over here in 2019 when Litecoin did its halving. Coming out of it, it did a 6x? 6x, yeah. And so I think it was Sale Guy pointed out that CTM 2.0 during that phase, coming out of it where Litecoin buy and hold would have extremely outperformed CTM 2.0, which didn't really do that well. I want to go into the stats over here, right? So we're looking Litecoin bottom, December 2018 with the rest of the market. It then did a 5 or 6 by July. Of note, Bitcoin also did the same thing. Bitcoin over here did a 4x between the same exact period. So whether or not it had to do with the halving of Litecoin or it just had to do with risk bottoming on the Fed's last rate hike or not sure, right? CTM 2.0 during that same period for 2019, did a 315% return with a max drawdown of 15%. So that's a pretty great year. There's no question about that. So we need to do a little bit more work. We need to do a little bit more work to find out whether or not we could do better on the settings, and then whether or not this is something that some people might wish to keep an eye on right now during this particular phase as Litecoin is entering that halving of the miners reward, as well as whether or not going forward this fits into the greater scheme of things for CTM portfolio allocation. So great work, everyone. Great work. JF, thank you so much for hitting that like button on here. This is beautiful. Thanks. We get the date, HBag. We got July the 22nd, 2023. Okay. I don't know what just went through my head, figuring it all out. I feel like I'm going to need to hear that or see that a few more times before it's ingrained into me, as Litecoin is not something that I generally focus in on. I think, and by the way, as far as 4-year cycle theory, generally out of the halving, that accumulation period does continue, right? For another, let's call it 3 or 4 months. And then that's when you really start seeing some of the magic kick off. I would like to look back at what happened at the last halving in Litecoin and see if it acted like Bitcoin does out of its halving as well. I'm not really sure, but lots of work to do over here. Jumping over to, and speaking of, right, we got LTC plus BNB. And I saw, right, HBag, you're asking what settings we're using for BNB. And AV sharing some particular settings that he's honed in on. I pulled them up. You know that if you go into the CTM 2.0 Essentials and you scroll down and you go to module number 6, you could find the shared BNB template. So I went ahead and I added in AV settings alongside it. So if you click onto that right now, you should see a dual screen here where you're seeing on the left side what are like the CTM shared BNB settings, and now we have on the right side the settings that AV is looking at. And this would be a very light summary, but coming back to 2020, that last 3-year period, you're looking at current settings showing an 8,800% return with a 21% drawdown. AVs is looking at a 7,700% return with a 37% drawdown. So over this longer time frame, there's no question I would be reverting over here on the settings on the left. But from 2021, it becomes more of, this is a much harder decision to make when you're looking at AV settings here. It's still a higher drawdown, 36%, but a really good return. Almost 3,400% return. That's 2 years. And again, some people, they may prefer to be trading at, and by the way, people always think about adding leverage. You could even reduce leverage here in this case, right? If you cut the leverage in half and you're trading at a 50% allocation to roughly an 18% drawdown for a 1,500% return, that becomes attractive. Our current settings, though, without doing that, you definitely have that lower drawdown, but a higher return. So here you would have, instead of a 1,500%, a 2,700% return. If you're not cutting down the allocation, the return's higher, but the drawdown is much higher. So AV, I want to get your eyes on this and almost even wonder why you're not going with the settings on the left. They seem a little bit, 122% return with an 18% drawdown. So your settings here that you're looking at well outperforming the 77% return with a 15% drawdown, right? Like, for sure, I'm going to give this one the check mark here. It's close, though. What's 50% more between friends on return? But coming back over here to 2021 and then going back to 2020, I personally, I think that we have the edge over here. So just take a look at it. Really interested in your insight, your opinion on that, and future thoughts, so that CTM could fit. That's what we do here. We put all the information before ourselves, and then we make the best decisions we can make. Right now, I'm leaving this up shared so that you have the opportunity, when you click on that link, to be able to view both those settings in there together. And that's it, CTM. Oh no, we have a market review here. And we want to review markets together. I was going to say, well, we covered a lot. We covered everything that I wanted to cover in this session, but we didn't get to have fun together. So I want to have some fun with you right now and take a look at what's going on across markets. And we'll start here with oil, right? We'll start with WTI oil, and it's rather interesting for a couple of different reasons. You all know I had the eyes on the breakout occurring, and then since the breakout, we are coming in for a retest. That retest is actually coming into the lower trend line over here, and it's a perfect touch of it. So technically, this is still quite sound. We have the breakout, the green descending trend line over here, breakout above, price breaking out above, and then we said 76. That would be the place to put the stop loss because it was below the lower trend line of the two. Price came in initially holding the first, but now testing the second. So it still looks good. This is nothing more than what would be considered for me a bull flag on this potential buy impulse. There's a buy impulse underway. Whether or not it's going to hold on the retest and resume out, or it's going to fail here, we'll be able to find out very soon. Oh, Micron, I hope you're having a wonderful, wonderful, wonderful holiday. Yes, there's no question about that. Oh, Micron, by the way, we introduced the new CTM section inside the Discord. Inside the new CTM section, it's going to revert down over here. We have CTM chat, right? We have the three main sections, cold storage stash. Inside the CTM chat, I pinned over here this new course module getting started in the weeks ahead throughout January. Micron, if you get the opportunity to help work through that with me, I would be extraordinarily grateful. It would be a huge, huge help as you did working out the CTM essentials for everyone involved within CTM. This is really Micron being able to organize this in such a beautiful way. Grateful for it. Let's get back into oil over here. So, right, we know exactly where we are and why. Let's take a look at what's going on with the dollar. Dollar over here, it's been going sideways, right? Ever since before we left for the holidays, ever since right after the FOMC, it's been going, it looks kind of like Bitcoin actually. It looks like here's the dump after the FOMC and then Bitcoin running sideways over here. So that's interesting. Normally there's a bit of an inverse correlation between the two. You can see very clearly hugging this line of support, the dotted line of support. looks like it could break down if it doesn't hold the support, and if it breaks down, it would be that target area we were looking at for what would be, or we're deeming, pretty strong support, because if it doesn't hold that support, we could see a much greater dump down on the dollar. Same exact analysis that we've been waiting and watching, right? That it's got to clear above this line for us to even look at the potential possibility for any type of uptrend to continue on the dollar. Right now, it is structurally weak, and ever since the breakdown, it's just kind of hugging and testing and testing and testing the support. You could almost see like a descending, you can see a descending triangle forming right over there with the support over here, horizontal, and then the downward sloping line over there. Let's take a look at the NASDAQ jumping up today and starting on the daily good. So I was going to say, or thinking, that potentially, I know people don't want to talk about bottoms, and it's almost as if you can't even say the word. Not that I even think that there's even an opportunity for it to bottom. We need to see a breakout of the trend line over here to look for any type of repair to take place. But I was noting the double touch over here. It's not a double touch, right? It's a triple touch. This wick over here was obviously under, but on the close, it wasn't able to do it. And now we have 3 touches of this line over here, right? Obviously, over here, this is nothing more than a bounce over here on the light week holiday trading. It means nothing. This is looking fragile. The reason I was saying that is because if it's not a double, it would be a triple bottom. If we saw price like all of a sudden recover, all of a sudden everyone was going to be talking about the double bottom, or they'll be saying triple bottom. But how many in real time are even looking at that? I don't see any type of potential repair in place unless price is able to break above this line over here. And if it does, it just sets price neutral. It takes it from a very bearish bias back to neutral in this area, and then it would be a breakout of the trend line above to have any type of bullish repair take place. S&P 500, much of the same analysis. You could see obviously tech is much weaker, right? As tech is testing the bottom of the range over here. We see that S&P was able to find support. This was support. This was resistance. And now it's finding an area in there. It's still got a very bearish bias. Recovering this line puts it neutral, because you could break down or break out from there. But right now it continues to have, ever since the aftermath of the FOMC, that bearish bias in play. Yields coming off a little bit today, right? Yields very healthy after this breakout, gap up, and then straight up. So nothing to see or really even add over here, except that where it topped out, you could see that area of resistance, that local resistance. So it makes sense over here. Right now, it looks like it's consolidating near that resistance. I'll move back into this line over here. Let me go ahead for when that gap was. This should be, or act as support. If it were, can't get it good. Let me try like this. So it's interesting, right? It's interesting because I had this resistance over here, which, perfect, right? And you can see it acted as resistance. Price came back and then come up. So now, since we're above it, I'm going to go ahead for the support area and do the reverse. This area of what was resistance, where it was right over here affirmed into support, is going to be the support that we want to see hold on the way down. This trade, the way that it was managed, was stop loss has already moved to break even. Would you, and I'm talking out loud here, be looking to take into this area right where price is in this moment, 10 to 15% off as you come into this first area of resistance? It makes sense. That's probably the proper thing to do. I'm going to go for the way that I would personally manage it right now, for just all or nothing here, the full hold, keeping that stop loss at break even, because it's above this area of support over here, giving that trade plenty of room to roam over here, as the Fed is expected at the beginning of February 2023 to continue their rate hikes and to raise rates further. And that's it. That's our look at the markets, concluding there with a nice market review. I have to say, really, really enjoy being back here with all of you. Really miss you all. Hope you're having a really good time. It's important to rest, to recoup, to get energized so that we could go ahead and take a look at what their next summit is. Or speaking of organizing, I feel like Andrew's on fire right now, going through a creative spurt. If you didn't get the opportunity to see inside the exchange channel, he just released a survey right before we went live over here today. Let me go into exchanges over here. Please fill out this anonymous survey regarding exchanges used by the CTM community. This information helps us better direct CTM research and tool development efforts. Included a Google Docs form. If you get the opportunity, please go ahead, fill that out. Very helpful stuff. And I like seeing Andrew going through a phase here where he's really intent on building, and that's how it works. Like, you go through this creative burst where you burst off this foundation and make these like extraordinary leaps, and then you consolidate them, right? Until that next phase upwards. CTM 2023 looking bright, looking hopeful. Everyone, have a beautiful day. May God bless you. I'll talk to you soon. I'm just going out with some honeymoon though. Wow. Look what happens if you extend this trend line. You can see the touch right there, no? Well recapped, and I had to. With all the work taking place on the Discord, I had to get it documented. Woohoo! That's right. Wow. I imagine around that time, 2024, 2025, is when we have a lot of the things that we want built really functioning, open up the doors for so much more. It's going to be beautiful. It's going to be really beautiful. All right, everyone. I'll talk to you soon.